Back in the groove.
Yep, we are live. We are Thanksgiving Eve, the busiest travel day of the year. Hopefully, we get some people in here if they're not too busy traveling. If you are traveling, hopefully you stay out of traffic today. I'll be fending off that myself later. But just to set up George and his little market opening, I wanted to share some stats for today because I was reading on Yahoo Finance about how Thanksgiving week on average is very good for the stock market. So three-fourths of the time the market is up by at least 0.3% throughout the week, and two-thirds of the time it's up 0.75%. And the market opened higher today, so it seems like we might be following that trend so far. If you just want to say what you're seeing in the market, George, and give people a little update.
Yeah, first things first. The SPY net option sentiment is at 42, which is as high as I've seen it in a while. So that's pretty bullish. Like it is approaching QQQ on the high side. So I think we've got a lot of enthusiasm this week. One of the things that we did mention is we did see the rate hike. It's no longer at zero. I think in 2 meetings from now it's at 2%. So something to keep an eye on. But basically, pretty much everything else we're seeing is bullish. One of the things that we highlighted in our letter today was the fact that actually, like, even with these like car loans, consumer credit problems that we're starting to see like manifest, and yeah, credit cards are at an all-time high, and we're starting to see actually car loan defaults are at, I think, an all-time high as well. So yeah, I think that we're starting to see what should cause more strain for consumer spending, but we're not necessarily seeing that. Like we posted in the newsletter today that it's forecasted to be, other than the pandemic, pretty much at the exact same levels. So yeah, that tells a pretty clear story that the market is bullish, and there's no reason for it not really to be bullish. As we see SPY net option sentiment go higher and higher. Probably the biggest bear story is around consumer spending, and if it's not slowing down for the holidays, even with credit cards at an all-time high and car loan defaults at an all-time high, then those are kinds of the reasons that you would be bearish based on consumer spending. So yeah, those are definitely worth keeping an eye on. We definitely want to keep an eye on if the what I guided to in the newsletter today, if we ever see a hike bet of 10% in any of the next few meetings in the Fed Watch forecast. But yeah, right now probably as bearish as, I mean, probably as bullish as you'll find me in the last year plus.
Now, I'm not sure if you remember off the top of your head, but do you remember in the first half of this year what the net option sentiment were for like the SPY and the QQQ? Is it higher now or was it higher then?
I can just, we don't need to guess. I could go take a look. I do believe it's higher now. But yeah, I'll go all the way back to January, and kind of take a look at what was there, because that's going to be our best. That's going to kind of be our best bet instead of guessing.
Yeah,
I think
you
probably like
mentioning that.
late January. If you want to actually, while I'm doing this, look up kind of where the peak of that January rally was. I'll do this end. Um,
SPY or
so
QQQ?
uh,
This doesn't really
yeah,
matter.
so even with what are we at? What are we at now in the SPY? All right, we're at 455. So yeah, like at the, I mean, here I'm just gonna look at the year. So yes, July it was a little higher, so I'll look there. But yeah, so the end of January when it hit like kind of at the peak 416 on the second, um, it looks like SPY net option sentiment wasn't even close to that. Um, so near the peak on that rally, we're talking about. Let's just check out February 5th. Yeah. So we're looking at, SPY net option sentiment. January 9th was the highest we actually saw in that whole rally, and that was at 35. So 42 is considerable strength. But let's take a look at the other peak in July 31st, actually, where it was 457. So higher than it is now. let's take a look at where it was then. To just very directly answer your question. Um, all right, pulling up July 31st. All right, we got July 30th. That's probably good enough. Um, yep, it looks like it topped out there around 40. So yeah, there we go. Price, like the SPY was higher in price. It looks like it was at SPY was close to 460 then, and then option sentiment was a little under 40. So yeah, looks like we're at the year highs right now.
I think that's an interesting thing to note. I guess that's what you would kind of expect if we're going to push through the highs that we saw at the end of July. So that kind of makes sense if we get a year-end rally.
Yep,
Um,
and we don't overcomplicate these things. There was a lot more macro concerns then than there are now. We never knew when we were going to tame the inflation monster. Now it looks like we've declared victory on that. So yeah, no reason really for this not to be more bullish than July.
well, that's funny you say that because I actually have an interesting inflation statistic I wanted to share for my fellow sports fans. Obviously, Thanksgiving, a big football day. So, sports tickets in October for 2023 versus 2022 went up. Where is it? 25.1% year over year. It was, I believe, the biggest inflation jump out of the whole Bureau of Labor Statistics report. And so I wanted to ask you, do you think there's any chance inflation could pick up any steam and become a problem for the market again in 2024?
Uh, Little to no chance. We've talked about, Powell's got better data on this than any of us. And we've talked about it time and time again that if the markets were performing, which they are, Powell really has no reason not to be risk averse and to be kind of overly aggressive, which is with his talk. So the fact that he's kind of waving the white flag in terms of raises, and the market is like, I usually dictate from that. Like if we were seeing like 20-30% bets on a hike still, regardless of my general opinion, I trust the wisdom of the market more often than not. Obviously, we have things to enhance that, and sometimes we're out ahead of that. But overall, just like I think a close to 0% chance or 2% chance of a hike, I think that's negligible enough that we have to talk about it in a negligible way. So yeah, I think there was something that you said in the first part of that actually was that I had more to say about that I've since forgotten. Oh, well, the sports stuff, like I wouldn't read too much into sports stuff ever. You look at the way these franchises keep being valued higher and higher and higher. Um, it's just like sports. As I think, as people get richer, that's a really like 1% activity, and becoming more and more with the luxury boxes and everything else, or at least much more elitist than it used to be as these stadiums get more and more expensive. So I don't think you can read very much into that. It's a supply and demand function. There's very little bit supply of like elite sports games and tickets, and more and more wealth being created, especially at the top of society. So I think we should expect those prices to keep going up, and I don't think we should use them much as an inflation indicator, because I would expect those to rise regardless, as we've seen with sports franchises.
No, yeah, that's probably really good point, and that's probably why it's not included in the Fed's core CPI. But we got our final development in this Sam Altman OpenAI Microsoft saga that played out at rapid pace from Friday to actually last night, so Tuesday. Um, Turns out he's not actually taking the role that he accepted Sunday night with Microsoft. I believe it's because too many employees of OpenAI were going to quit if he wasn't reinstated as the CEO of OpenAI, which he now is, and he's actually rejoining OpenAI again. So from fired to rehired to like rejoining OpenAI in 4 or 5 days. What do you make of the whole story now? It's kind of developed and we got more details.
Well, I think it really like kind of verifies and supports the theory that we were playing with earlier in the week, which is that it might have been something that, either Microsoft behind the scenes or certainly, the OpenAI investors were doing to create a situation where, create some chaos where they wouldn't deliver on time. And as a reminder, the deal is set up so if Microsoft doesn't hit certain delivery schedules, then essentially right now Microsoft is a little bit behind the best technology, in their contract, and they have to kind of be more dictated what OpenAI is ready to release to them and use it in Microsoft's products. But essentially, the deal is structured that if they don't hit those delivery schedules, that Microsoft gets more control, less delay, things like that. So it would increase the monetization engine. So I think this very much supports the theory that we were talking about, that it very well could be investors behind the scenes. And we talked about like Sam Altman is kind of like a casualty of this larger move to monetize OpenAI more. And like the way this played out absolutely tells me that that looks like the correct read. Because if he was fired for cause, you all the time, you don't have the kind of uproar when CEOs are fired where everybody's threatening to quit, right? If there's cause or they're doing a bad job, you're not going to have like open letters where most of them resign, at least for the most part. You aren't, if there's a good reason. But we didn't get any reasons. I don't think there were any reasons. I think, Occam's razor, simplest answer is probably that they did want to monetize more. And, now a lot of that board is out. So I think we saw an effective revolution by the OpenAI people. And I think obviously that supports the theory that, Sam Altman was, maybe not wanting to speed up the monetization as much as some other people want, which checks out in the way that the deal is structured, where it gives kind of OpenAI a lot of control. And I honestly think that's great. Clearly this was something coming from the board. And it kind of looks like, especially how it played out, it was kind of about that monetization and wanting to increase monetization. And that's one of the things that I love about technology and people improving technology, because like you do have power. You don't have to just bow to boards if you're making a good product and you're differentiating yourself. And like one of my favorite stories, that I will give the very abridged version, but anyone, I think it's called like Barbarians at the Gate or something like that, or it's about early Silicon Valley. I'll look up the no, I'm gonna look it up. Robert Noyce movie on Silicon Valley, because it's really really good. American Experience Silicon. Yeah, it might be American Experience Silicon Valley. That's what it keeps on doing it. But basically, a lot of people don't know who Bob Noyce is. And this story with Sam Altman and just like people making good tech really reminds me of that. Because Bob Noyce is one of my favorite CEOs. And I'll give you the really abridged version of why. Essentially, Bob Noyce was one of the many scientists under a team that invented the integrated circuit. And the guy who led that team won a Nobel Prize for it. And basically, that guy got a big head. Noyce and a lot of the other scientists kind of didn't want to work for him anymore. Because he didn't give them enough credit and was kind of like absorbing it all into his ego. So they lead a little revolution where they're all engineers and none of them really want to be the CEO, but they say someone's got to do it. And they all, kind of have this meeting where they're essentially revolting. And they go around the table and basically all of them say, we want it to be Bob Noyce. And his answer is like, well, I'll do this, but I'm not going to be a traditional CEO. And they're all like, that's fine. We think you're the best for the job. So a bunch of the most talented scientists in the world. They get funding pretty quickly from Bell Labs. They start a company called Fairchild Semiconductor. Like at the time, Texas Instruments was kind of the leader in that field, and Fairchild starts eating lunch of Texas Instruments. But as this grows, Bob Noyce is actually noticing more and more that too much money is coming out of Fairchild and just into Bell Labs. And he goes to his contact at Bell Labs and he's kind of just like, well, what are you like? We need to fund this idea and our tech. Like, we're making all this money. Why is so much leaving? That doesn't make any sense. And the guy says something to the effect of like, well, that isn't really any of your concern. Like, our deal is we take as much of this as we want. Here's the contract essentially. Which is kind of stupid of that guy at Bell Labs, considering the origin story of how Bob Noyce got to him. So Bob essentially, now experienced at this clandestine revolution thing, went to a bunch of the top people at Fairchild, basically said, let's get out of here, but this time we're funding it ourselves. They all got pretty rich from Fairchild. Um, and he started a little company that basically the one rule was he was like, we're going to be very egalitarian. I'm going to be flat org structure. I'm going to be the CEO, but we're all going to work in cubicles, and my door is always open. I think I've told this story once before, Stephen. Do you remember what that company became?
I know you told it, and you told me. I know I guessed AMD and I guessed wrong. So
Yeah. So a little company called
Babylon
Intel.
Semi? Intel.
Intel.
That's what it was.
Yeah.
Intel.
So maybe you'll remember this time. But yeah, that's one of my favorite stories because most people don't know who Bob Noyce is. Yet he invented a lot of the technology, or at least better versions that we use today, and was a very non-traditional CEO. And I really like that. And I think organizations and Prospero will already. We do have a pretty flat org structure. We will continue to. I think honestly that I'd like an office if we ever do have an office. I'm not a cubicle type of person, not that egalitarian. Uh, but I love that story, and I think there's anyone who's thinking of starting a company has a lot to learn from how Bob Noyce did it.
Yeah, so it's great. We're on the topic of semis because Nvidia reported last night. It's crazy. I can't get out of the sun today. It's like in my face the whole time. I don't know where to shift. But so Nvidia reported good earnings that had $4.02 of EPS, 18.12 billion, which was 206% year over year revenue growth. So they kind of killed their earnings, and yet the stock didn't react maybe how most people would expect it to if a stock has that good of earnings. So George, you want to tell us what's going on with Nvidia stock?
Good earnings is an understatement. They posted one of the best quarters I've seen for a company ever. One of the things I actually wrote about in the newsletter is it's just like it's pretty unheard of to grow. And we talked about how like they grew at 100% last quarter, and it would be hard to keep that up. And now we're talking about 200%. But that is actually the point that we've made time and time again with Nvidia is like there's nothing wrong with what they're doing. Just what they're doing is so exciting that it's getting priced, I think, way too high. And that's basically what we saw. They basically issued a concern like part of our international relations right now with China, we're kind of hitting each other on these like advanced tech things, especially with these semis. And we don't, Nvidia makes the best chips in the world, and we are not currently letting China have them. So they're retaliating in some ways that is basically making Nvidia give a warning. And even that warning was enough to send their stock down 1%. But it's absolutely incredible. Their data center revenue was up close to 300%. Like quarter over quarter, I believe it was a 41% increase, which is just like absolutely nuts to grow a business that fast. And what I actually shared to situate like how crazy good this quarter is for Nvidia was Amazon in the last 13 years, one of the biggest growth companies of our time. In the last 13 years, their best quarter in terms of year over year growth was 51%. So that is absolutely incredible how much better Nvidia is than that. And the even crazier part is that was about at half the revenue that Nvidia posted this quarter, about 9 billion, like it was 9.9 billion for Amazon in 2013, Q2 2013. Oh, sorry, Q2, I believe it was 2011. Sorry. And last 13 years, 2011 was that quarter. And Nvidia was about a little over 18 billion for this quarter. So it is absolutely crazy that they had that good of a quarter, but it says everything that we've warned about Nvidia, which is like the slightest worries are really going to affect it the way it's priced. And we pointed that out in the letter today, where Nvidia in like our big kind of bull filter, where we add a bunch of our key metrics. Meta is one, and Nvidia is two. But Nvidia's upside breakout is at in the low 60s and has been there. Yet their profitability plus growth is at an insane like 162. So obviously they're growing at an incredible rate and they're incredibly profitable. But yeah, the interesting part about that, like we're saying, is that um, that upside breakout. So basically, is like in this at 60, Meta is at 100, and the way you can easily explain that is, yeah, at that price, institutions are there's much more demand in the long term options markets for Meta, which is at a 19 2024 PE versus Nvidia, which is at a 51. And that's one of the really important things about our signals. Like everything that we're seeing in terms of how the pricing and the reaction to earnings and everything we saw this quarter actually shows up in that relationship to of upside breakout to profitability and growth. And that's the great thing about our signals. They're supposed to demonstrate and visualize underlying market equations and basically where institutions are betting and to what extent they're bullish or bearish. And that is kind of picked up in our metrics because of that relationship that I'm talking about.
Yeah, so the 206% year-over-year growth just in my mind makes me think that when they report next year at this time, their comps are going to be insane to try and, I mean, if they grow 200% again next year, that would be unimaginable. But like, do you have any kind of expectation of how they're going to be able to grow like after growing this much this past year?
I mean, it's already unprecedented. But if they keep growing at like 41% incremental for a quarter, that is basically like the pace for this quarter is keeping up. And, I expect AI, these data centers that I wouldn't bet against them doing that. But obviously, like we talked about, it's a pretty risky bet to bet for it when we're already talking about unprecedented levels of growth and them essentially having to keep this up to hit that. But yeah, like NVIDIA is something that's in our model portfolio, but it's very much something that we're of the strong belief that obviously right now, we have let's see, I'll get a live number of how many loans we have in our portfolio. We've really done a lot more, and this actually might be helpful to just let everyone know so they know how long and short we are. Right now, we have 71 open long positions. So NVIDIA is one of 71 positions. So we'd rather be long than short it, obviously, which is just I think it is way dumber to be short NVIDIA. But okay, I'll get you the short. So right now we have 45 shorts and 71 longs. So yeah, that's tilting a lot more in the other direction. And obviously in a portfolio of 71 stocks, we think it would be a mistake not to have NVIDIA in that large of a portfolio. But it is just it's rife with risk. And you guys it's absolutely what's even crazier than a stock posting close to 300% gains in their, in data centers, one of their main growth areas. That stock also being down 3.37% today, right now. It's just that right there shows exactly how right we are to warn people about NVIDIA.
Yeah, and when you were teeing up the NVIDIA stuff, you mentioned Amazon, which we have a story about the man himself who benefited the most off Amazon stock over the years, of course, Jeff Bezos. He has been selling Amazon stock. So far, he sold around 1.7 million shares. And the story I was reading was saying he might sell as many as 8 to 10 million, but which would total about $1 billion. But he does hold 988 million shares, so that's less than 1% of his total holdings. Do you think that's a bad sign for Amazon, or is it just nothing because it's such a small percentage of his wealth?
As we said last time, sometimes too much is made of this stuff. But yes, absolutely, it is a bad sign. And to, address some of the things that people complained about in the last video, CEOs, especially people as rich as Jeff Bezos, do not need to sell their shares. They can take out loans against those incredibly valuable shares. They have ways of getting liquidity. They don't have to sell the shares to feed their families or buy their yachts. They have capital, they have liquidity for that. The only reason you sell your shares when you're Jeff Bezos is if you think the stock is going to go down. That is the only reason that you would move on that. He does not have liquidity problems. Jeff Bezos does not. Of all people, he doesn't. So just get that out of your heads, anyone that doesn't seem to understand that. But at the same time, yeah, let's look at their current PE ratio. Their price, last I checked, they were priced at 2024 like 41. So they're closer to Nvidia. Meanwhile, they're not growing anywhere close to Nvidia. So yeah, Amazon's overpriced relative to, I would say, pretty much anything else in the big seven. I would say pretty much anything else, actually, because I think we're most bearish on Apple, but that's at a 29 2024 PE. So that, the kind of the decline is priced in a little bit, but we love Amazon as a company. Like over the next 10 years, I bet on them as a company over any other company. The problem is that has become increasingly priced in. Too much has been priced in based on, much less growth that they have versus, versus a place like Tesla or Nvidia, obviously. And yeah, if you look at it, let's get like a live number, like just to situate it. Amazon's profitability plus growth is 115, right? Compare that to Nvidia at 162, or we'll get Tesla at let's see, gotta do some math here. 138. It's not in the same ballpark. So that is why Amazon's upside breakout is at 52. It's lower. There's less reason to speculate on it. It's just priced very high. And Jeff Bezos knows that. And he's, very calculating. He knows the business as well as anyone else. He probably knows it's overpriced. And the bottom line is he might want to buy a stock like Tesla or make another investment, not because Amazon's a bad company, just because he wants that money because he sees a better investment. It's not about liquidity. And I don't know, like, one of the things that just like I don't understand about these people on TikTok or whatever, like they're trolling. It is what it is. But like I don't understand how people with such little real knowledge speak so confidently on these issues. It's just like, no, sorry, average person that thinks Jeff Bezos needs to sell stock to pay his bills or buy his yachts. Like, maybe you should learn more about these actual mechanisms before you talk down to other people on the internet who actually, in reality, know way more than you because they've dedicated their lives to both studying this stuff and also speaking when they know what they're talking about. And I think almost everyone who talks about stocks on the internet is not good at that last part and needs to get better. Not just because I don't really give a shit at the end of the day if people think they're smarter than they are, which is almost everybody. But I do care about when that A is causing other people to make bad investments themselves, convincing them that they don't need to do diligence or it's things that they're saying are right. Or I would say even more nefariously, it tends to be people that own Apple stock and just want to trash anyone that says anything bad because, Apple is their team. And you need to get rid of that mindset. You don't have a team when it comes to stocks. Your team is the stock that's going to go up the most. It doesn't matter how long you've owned it. It doesn't matter like how much you'll pay capital gains taxes or whatever. People obsess about that stuff way too much. You should own the best stocks. And if you're so insecure that you can't hear that, I believe Jeff Bezos is, but whoever is like one of the largest shareholders, if not the largest, if they're selling their shares, don't try to twist that into a non-event. It isn't. It's a bad sign.
Yeah, you said Bezos isn't selling to buy anything, but I don't know. Maybe he wants to Black Friday shop another super yacht or something. We don't know.
No, I mean, again, it's not liquidity. Like I'm saying, it's all about investments, right? He is likely selling because he prefers another investment. That's like almost entirely like what it is. He could just be going to cash and he might want to buy Amazon back at a discount. But even then, he's he's investing a lot of money. Like it is almost guaranteed that he prefers another investment if he's selling because cash isn't a problem for him. Liquidity, buying power isn't a problem for him. Like even if he can't like physically get his hand on the loan against his stock, which is absolutely insane, like his credit, he could buy his yachts. He could walk up to the yacht owner and just be like, I'll pay you in installments. Like increasingly, we're actually seeing seller finance sales because of interest rates, where it's just like people that are wealthy are just being like, okay, here's the deal. You pay me back. You don't owe me a lump sum. You'll pay me back in these installments. And yes, Like nobody is Jeff Bezos's word on payment uh, is better than most people's money. So he doesn't need cash.
Yeah, and so I wanted to talk about
Oh, and one
retail.
more thing that we should
Yeah.
say, like Bezos has to pay taxes when he sells them. There's a substantial tax bill on those gains, so he has to be so sure that Amazon is a bad investment that he pays taxes, and he doesn't like paying taxes. Billionaires don't like paying taxes, so yes, it is not a good sign when they sell stock because there is literally a tax on that.
Yeah, and actually, Amazon was down the day the news came out, so I don't know if that's the reason why, but it definitely probably played a role. But I wanted to bring up retail stocks one more final time. I think anybody who watches the stream probably knows your stance, but it would seem to me they had the most bullish, month of the year coming up with Black Friday and then holiday shopping, and maybe Macy's gets a little juice off the Macy's Thanksgiving Day parade coming up. I actually looked up Macy's signals and Prospero. They weren't that good. They had a 31 upside, 49 downside breakout, 65 net option sentiment. But what I did find weird was they had a 90 dark pool rating, which I don't know if you want to shed some light on that and just talk about retail one more time in general.
Yeah, I mean, in this cycle, what we tend to see with dark pool is a high dark pool rating predicates a move down, actually around like up to 3 months, but by 6 months a move up. But we're moving out of that, so a high dark pool rating in a different market could very well predicate a move up because essentially, uh, institutions use the dark pool to trade, off market. So the easiest way to understand why you would use a dark pool is if you've shorted a stock pretty heavily and you don't want to cover and drive the price up on the open market. So you'd rather exchange in the dark pool and just drive the price up as you're covering your shorts if you say still want to leave, part of your short position open. Um so yeah, I think basically um high dark pool I tend to just like kind of stay away from on the long side because ultimately what it means is that someone in the background wants to transact or control the price to a different thing than the market price. And generally it's good to stay away from situations where there's institutions that are wanting to move a stock in a way that's different than the market, or mask what might be the real price of the stock. So yes, I would say overall stay away from Macy's. In terms of retail, we just bought back into ELF in our model portfolio, Elf Beauty. That's looking good. So I would say that I would say two things. Um, the first is that um, something like general retail, yes, I don't like it, would stay away. I think there's more pain to come, even if we're not seeing it yet or in the holiday seasons. But putting on my value investor hat, general pain in the consumer cyclical or retail sector or whatever creates opportunities to buy things. And I think, we've recently had wins with Wingstop, Lululemon, we're in Elf now. So yes, I think both of those things. Oh, we're still in Lululemon. Should have sold it earlier. We're just a little under the market, but we had a nice gain on Wingstop. But yes. Anyway, oh, we just created an error in our little model. That's annoying. Why are you being like this? Okay, I need to stop looking at this. I'll fix it later. But it's gonna ruin my whole calc. Sorry, I do need to fix this. If people go in the model portfolio and look, it's not even letting me delete. Very annoyed by this. Is my keyboard not working? All right, I have to reload this. This is gonna annoy me. You want to? Where were we? Oh, let me wrap it up, and then I'm gonna fix this. So yes, essentially, like what we're looking at here is, stay away from retail stocks on the whole. But yeah, look for buying opportunities. And right now, I think Elf is a big one, and there might be ones on an ongoing basis. Definitely look for high net option sentiment retail stocks. We can suggest others as we go if we see more opportunities. A great way to hedge as well, just generally. Um, but yeah, I think that's a good general lesson where, you know, even in a bad sector that's just going to get hammered overall, like while you want to stay away or short those things, it also frequently creates good value opportunities too.
Yeah, so maybe while you're fixing whatever's on your computer, I'll speak to our viewers for a second. So we have 8 viewers in here. We have 5 likes. So if you found anything useful or valuable today, go and like this video. And you're going to be with family and friends over the holiday season. And what's better at the Thanksgiving dinner table than some stock market talk and sharing how useful these Prospero AI live streams are? So share them with family and friends if you think you find some value out of it. We're getting to our last topic, so if you guys have any questions, comment them now, so we'll try to answer them before we wrap it up. So our last topic of the day is a big crypto story. CZ, who is the CEO of Binance, which is the biggest international crypto exchange in the world, just got found guilty of money laundering. He has to pay a $50 million fine, and he's facing up to 18 months in prison. And Binance has to pay a $4.3 billion fine, which is one of the biggest ever. So George, I'd tee you up to brag on crypto some more.
Yeah, I mean, I think this is the biggest problem, and like to draw a little bit of a parallel, I saw similar things in the mortgage industry, especially during the mortgage meltdown. Like, sometimes when you have these like big, profit centers, gainers, especially rapid, and I would say for jobs, we could even call them with that don't require a lot of technical expertise or still skills. I'm thinking like a lot of people that were like mortgage salesmen or real estate brokers or things like that, which is not to criticize overall, just the same thing with crypto. It attracts a lot of people that don't want to make their living in an honest way. And I think that is like ultimately the big problem with crypto. That it's just like not only are there kind of ways that we talked about, like non-transparent leverage markets, non-transparent options markets, and even people like I see these crypto people, like some of them in groups, one of them who I like actually give a hard time all the time, who's just saying like, oh, like pitching like 80x or 40x levered crypto funds as if that's like an okay or thing to pitch. And it's just like, no, like if you want to do that, that's fine, but don't normalize the risk in this. It's too much. And I think that that's just the problem that you just have these people. There's so much money, people like SBF and it just attracts the wrong kind of people. And the more money that it generates and the less oversight, the more of that. And it's just like, yeah, like for all people's problems with the SEC, like there isn't this much of a problem where you're pretty much like looking at like all of the major leaders. The guy who did that, like the other guy who's on the run, that I think the Korean guy that did that, what is it, Terra? Like we're talking about a lot of the major people basically turning out to be criminals. And you know, for all like fraud, like straight up fraud, I think is what we're talking about here, and embezzlement. And I think that like, yeah, for all the complaints about like the SEC and hedge fund people, and like, yeah, there's stuff here and there. For the most part, the SEC does really help with that and does really create mechanisms where, there might be people gaining advantages, but it's not outright fraud. And I think one of the things, and I always like to give this example, maybe a little too much, but I think it's really important for retail investors to take in, which is just that, like, a lot of people say like manipulation and corruption and all that stuff when it comes to the stock market. And I have a really good analogy that I've given before, but also I think like a new lesson on the end of that, which is just that like that kind of attitude is just like the wrong attitude. Because like when we talk about like, say airlines, nobody complains about people paying for first class tickets or private jets or anything like that. People are comfortable with that unfairness and nobody complains. They just like sit and coach, and nobody ever says like, why should these people get first class seats for more money? So it's like when it comes to like the highest stakes game that we know, the stock market, why on earth do people not expect trades to travel in a different class? Private jet first class. It's just mind-numbingly stupid that people complain about this. Because, like, honestly, the other thing, and this is kind of the new part about it at the end, the other thing that, like, as I think about this more, is my personal mindset when I'm wrong about something is, what did I do wrong? No matter how good I've gotten at building algorithms and value investing or whatever, when an outcome turns out poorly to me, I'm not blaming institutions. I'm not blaming other people. I'm saying, what did I do wrong? And retail investors, just I see time and time again, when the outcome isn't what they want, it's always corruption, manipulation. It's never their fault. It's never their process. And that's the thing. Like, I don't know, in this unfair world that we live in, who promised you fairness in the markets, but give that up and start looking at how you can improve your process. You can improve what you can control. And I guarantee your outcomes will be better when you start looking at it like that, and stop whining about inflation. I mean, start whining about corruption and manipulation. Because the bottom line is and the other thing that I say all the time, or you should know that you're out there in the markets fighting giants and robots and giant robots and swarms of robots. So why do you think that you can beat those people? You shouldn't think that you can beat those people. And you are way too conceited and full of yourself if you think you can. I'm always watching my back, no matter how many years. And I'm always assuming that even if I have something right, it could go wrong tomorrow. And everybody needs to have more of that attitude, more respect for their opponents. And the big thing that the Prospero signals help people out with, I'm just like, why would you fight the institutions when we help you walk in the shadows of the giants so you don't get stepped on? And that is more of the attitude that people need to have. And, like anything in life, taking personal responsibility for things that go wrong, you are going to be way better than if you blame other people and blame circumstances.
Yeah, I could not agree more. Accountability is something people really need to, take to heart. We got no questions. You want to share what you're thankful for on Thanksgiving, George? Is it Prospero?
Oh, I mean, there's a lot of things that I'm thankful for. I think, something in particular that I'd probably go first. I don't think that person likes me to share much about that. But they know that's probably enough for them if they're watching. But yeah, I mean, really, really exciting. Everything's going on with Prospero. We have our NASDAQ Tower Shot coming up on December 11th, and actually going to do the closing bell there. And that's after a trip to London, where I'm going to be on the same, speaking at the same conference as, one of my idols, Ray Dalio, Jamie Dimon, Kathy Wood. I'm one of, I think 15 or 12 speakers that aren't at Finimize. So yeah, just like a lot, I've been working at this a long time, as you and a lot of other people know. And if I was doing it for the recognition, I would have given up a long time ago. I haven't really been paid much of anything in 13 years, and I've put a lot of my savings, pretty much all of my savings, in along the way. So, and for those that don't know, this is my parents' house, which I thank them for letting me use and helping me get Prospero off the ground. Thankfully, they don't live here too, but they were very nice to let me come back here when I was leaving San Francisco and really trying to, get my budget as small as possible. So thankful for them. Thankful that, things are starting to go well. But, I think more than anything, I don't look at the recognition or anything like that as anything that isn't, justified. I think we're getting it because we're really helping people. NASDAQ, Finimize, these conferences came to us or me to speak. And, we spoke at a Princeton International conference recently. They're all coming to us because we've created a quality product that helps people and is really differentiated. So if I'm thankful for anything on that, it's the people that watch this and our users that are like a part of the story and are trusting us to help them get better at investing.
Yeah, I think that's really beautiful. The life of an entrepreneur or, a business founder, it seems glamorous, but sometimes it's tough. So, it's good that things are going well at Prospero. I'm thankful for joining this past year, first Thanksgiving as a Prospero member. So, you know, happy that I'm part of the team now and excited for the future.
Me too.
But
And I'm thankful that you joined as well. These are
thank you.
these are really these are they're fun. I love all the little shorts, and even
Mhm.
more, I love that I don't have to edit them myself. So thank you for that.
Yep. Yep. No problem. I love it. So thanks for everybody joining. Hope everybody has a happy Thanksgiving, and we'll see everybody next week.
Happy Thanksgiving.